Chipotle is one of the best restaurant investments that you could have made in any time in the last 10 to 15 years. And now I think there's another company that looks a lot like Chipotle did before it became the name that we know today. And that company is Portillo's. It's a bit of a different concept. It isn't quite as fast casual, but there's definitely drive-through, there's pickup, and this is a company that generates a lot more revenue per restaurant than Chipotle does. Big growth plans ahead. And so I want to compare these two companies, look at where Chipotle has come from over the last decade and where Portillo's is potentially going, and why I'm so excited about this company as an investment. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. Let's start by looking back at Chipotle because I think the company's growth is really important to understand. And I'm going to start with a few charts. The first chart shows in brown, you have the total revenues from Chipotle, and you can see that revenue has compounded over the last decade at a 12.3% rate. That's a pretty solid growth rate, not incredible, but what exactly has driven that growth? There's two segments, and I'm going to pull this chart up to show this a little bit more clearly. One is the total restaurant count growth that has grown at 8.3% over the past decade, more than doubling the number of restaurants, now 3,300 restaurants in the chain. And then the other piece is average restaurant sales increasing from $2.1 million to $2.8 million. Keep that number in mind because as we compare these two companies, this is what I find really fascinating is that Portillo's is generating about as much in restaurant level EBITDA as Chipotle is just in revenue at its restaurants. So that's the way that Chipotle has grown. And if you think about their business model, really every time they add a new store, you just add another cash machine to the business. So it costs money to build those stores as when you're in growth mode. You may not be as profitable as you will ultimately be when that growth slows down a little bit. So Chipotle was in that phase in the late 2000s, early 2010s. That's when they had a ton of growth, but now they're getting to be a bit more mature. That growth rate has gone down into the single digits, but Portillo's is still early on that curve, more analogous to what Chipotle was in the mid to late 2000s. So let's go to some of Portillo's numbers. This is a look at the number of Portillo's in the network. There are now 72 locations as of the end of 2022. They're going to be adding 12 to get to 84 by the end of 2023. And you can see that the growth rate of restaurants is about 10%. So it's a little bit quicker growth than Chipotle is going through right now, but they actually have bigger goals for that going forward. Here's a look at their strategy from a geographic perspective. Portillo's really started in the Chicagoland area. That's what this red segment is here. And then they call this the cheese sauce spill. That's the adjacent states where they have started to expand, but don't have a massive presence. I'm in the Minneapolis area, and there are, I think it's 3 locations in the area, but they're pretty spread out. So nothing like the density that you see in the Chicagoland area. Where they're really scaling in the future is in the Sun Belt. Arizona, Texas, and Florida in particular are the areas that they're expanding the most over the next year. And the numbers that they're showing in those areas, the revenue that they're generating per restaurant is really phenomenal. I mentioned earlier the revenue per restaurant for some of these comparable stores like Chipotle. So Chipotle is generating about $2.8 million in revenue per unit. Portillo's is just off the charts compared to that. The cheese sauce spill area, $5.7 million. That's a little bit disappointing from Portillo's standpoint, being this company overall is generating $8.8 million in revenue per restaurant. The Chicagoland area is averaging $10.8 million in revenue. And there is a restaurant in Texas that generated $17 million in revenue in its first year. So the numbers coming out of each one of these restaurants is just off the charts from comparable restaurants that you probably heard of. Shake Shack, Sweet Green, Chipotle, Cava. These are some of the comparables that the company is looking at. So let's look at some of these restaurant level numbers because this is where Portillo's is really impressive. Restaurant level adjusted EBITDA for the last 12 months ending September 24th, 2023, $151.5 million. That's more than $2 million per restaurant and a restaurant level adjusted EBITDA of 23.6%. So just phenomenal numbers coming out of each of these restaurants. And like I said, the way to grow is both grow the revenue coming out of each restaurant and then grow the number of restaurants. So that gets us to where Portillo's is expecting to grow long term. You can see that there's two pieces here. They want to grow low single digits on a same store sales basis. But the biggest driver of growth is going to be 12 to 15% annual unit growth. So the number of restaurants that are going to be going in. And the company spent a lot of time at an investor day clarifying exactly what the strategy is for a lot of these restaurants. So in 2024, they're going to add only Sunbelt locations, and they're going to add Sunbelt and new markets. On that map I showed earlier, you can see there was a few more states in the South adjacent to some of these Sunbelt states. So Georgia was one example that they're going to add. And this is going to be where they're going to be expanding in 2025 and 2026. This is where you're seeing unit growth go up to 12 to 15%. And one of the things Portillo's is doing is changing the size of the box or the size of the restaurant that they have. You can see that previously they would build very large restaurants, 12,000 square feet, 105-foot production line. They've really squeezed that down in a number of locations. 7,700 square feet in Allen, Texas, and a 65-foot production line. And in the future, they're going to pull that even further, 5,500 to 6,000 square feet with a 47-foot production line. And one of the reasons for this is what they're seeing is that the restaurant space that they have is less important now than it was previously. If you have seen a Portillo's, a lot of them have dual lane drive-throughs. So drive-through is just a phenomenal business for them. You have pickup and you have ordering online as well. So a lot of the people who are eating Portillo's are not eating it at the store anymore. That means you don't need as much square footage for the store and gives you a little bit of an opportunity to improve the square feet of that production line as well. So a lot of learnings going into that. And that was something they covered a lot on this investor day. So it seems like they're just getting more and more efficient as a company, not only building those restaurants, but also the way that they're operating. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So Chipotle is really the gold standard when it comes to restaurants. Just one of the most impressive build outs, really impressive operations, very efficient. But as we see Portillo's expand, I think this could be another company that becomes a gold standard in the industry. Far more revenue going through a Portillo's today than we have with a lot of competitors like Chipotle, like Smack Shack. And there's a ton of potential to expand outside of the regions where it has normally operated. I talked earlier about how Chicagoland area is really where the company started, and then started expanding into some of those adjacent markets. But now the real potential that the company is seeing is in the southern half of the United States. That's where a lot of the population growth is going. It's where there's more economic activity. It's a little bit more spread out. So something like a Portillo's where people are going to be using drive-through is going to fit in those cities really well. And the opportunity to potentially grow same store sales in single digits, but grow the store count by 12 to 15% per year means this could be a phenomenal growth step. That is a faster growth rate than Chipotle has done over the past decade. And Chipotle has been a very phenomenal investment over the past decade. Now, Portillo's is not a cheap stock. As I'm recording right now, on a next 12-month basis, the price to earnings multiple is 46. I talked earlier about how you're going to give up some of the net income, that bottom line benefit when you're expanding, because you're spending a lot of money on planning out that expansion and pre-opening costs. So take that price to earnings multiple with a bit of a grain of salt, but enterprise value to sales is 2. That's very reasonable for a company growing this quickly. And enterprise value to EBITDA on a next 12-month basis is 14. So I think those are really reasonable valuation metrics for a company growing as quickly as Portillo's. There's a playbook here. Chipotle has really shown the way in the restaurant business to run an efficient operation and then just scale it over and over again. I think Portillo's is on its way to doing that. Management has said they could have 600 to 800 stores in the US. We're not even at 100 yet. So there is a long runway of growth for this company. And I think this looks a lot like Chipotle did 15 years ago. But what do you think about Portillo's? Is this a stock that has ever been on your radar? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.